Well, thanks for tuning in. You're watching Deep Dive with me, Nikunj Dalmia. Now, the Prime Minister's visit to the United States right now, which is currently on, is of immense importance. The global backdrop is noisy, trade wars are at play, and the global supply chain is getting rebooted. So, how will things change in the short term, in the medium term, and in the long term? Markets are hoping that India would be the preferred trade partner for United States. And tariffs, if they go higher, they will not be as high as what has been imposed on countries like Canada and Mexico. Markets also hoping there could be a large list of essential exports which could be outside the preview of essentially the trade tariff. Both for fossil and non-fossil, for the energy sector, expectations are that new bilateral breakthroughs could be at play. For defense, the general view is that there could be technology transfer in areas of aviation, large, complex defense components and drones. And then immigration, we all know that immigration, I think, is the burning topic right now in terms of what could be the mid path, which does not affect India and does not hurt US. So these are the four things on which markets are really expecting something big and large breakthroughs to happen. But before I go to Ajay Sahai, Director General and CEO with FIEO, I just want to establish that what is India's current trade relationship with US? Exports versus imports. As per the last data, India's exports to US are phenomenally higher than the imports. And I'm keeping IT services outside this bracket. That's $250 billion. That's not part of this bracket only. So the trade gap between US and India is actually widening, which means India is exporting more to US, importing less. And when the trade gap is large, the importing nation would say that I'm giving you more money and I'm getting less in return. I'm importing more from you and you're taking less from me. So trade tariffs, in a sense, are the ones which could really make India's exports more expensive. But $45 billion, if I consider what China currently has with US, what Mexico currently has with US, what Canada currently has with US, for a size like India, I think that's not very large. So what we should expect in terms of specifics, I'll take that conversation forward with Dr. Ajay Sahai, Director General and CEO with FIEO. Dr. Sahai, good to have you on ET Now. Thank you for joining us. So let's understand. Do you think India will continue to be the preferred partner of United States, a preferred trading partner?
India is currently one of the big partners of the US, and we have seen that over a period of time, our trade and investment both with the US is improving. With the China Plus One policy of the US companies, a lot of businesses already moved to India, and a lot of investment is also in the pipeline, which is moving to India. And in times to come, I'm pretty sure that India will be one of very strategic partners. And we all know that today the strategic partnership is also playing a very important role, particularly when we have the new concept of friendshoring also. US is also making a conscious effort to realign the global value chain, bypassing China, where India is all set to play a very important role. So in short, though, of course, these will be little testing time for all the countries in the world. Uncertainty is on the rise. But when I'm looking from the India's perspective, I feel that India will be one of the countries which will gain in the process.
But if tariffs have to go higher, in which are the categories they could go higher? India's largest export to US is still gems and jewelry, followed by pharma and then textiles.
In fact, if you look in India's export to US, India is not threatening US manufacturing in the sector where US want to revive manufacturing, or US want to scale up the manufacturing, or US want to attract manufacturing. So from that perspective, I don't think there will be any actual threat of the tariffs on India. Though, of course, this threat may be used for negotiating with India. Probably the US strategy would be that let us put the tariff threat, bring India on the negotiating table, get more market access for the US product, better tariff concession for some of the items in which US may be interested in. And in the process, also look into bridging the bridging the trade deficit. And you have rightly said that this trade deficit is not taking into account a lot of imports which are happening, maybe of the defense or in the aviation sector. And if you look into even the oil sector, roughly 1/3 of US total exports to India today is oil and gas only. And probably if we are looking into some more challenging time for Russia and Ukraine, probably this sector will also be showing a very spectacular growth in times to come. So I'm not much worried about all these developments.
But what would be the threshold beyond which textiles or pharma or gems and jewelry would start hurting? 5%, 10%, 15%?
So if you look into the tariff which has come on steel and aluminum, since they are across countries, I don't think there is much threat to India. India will feel the threat if India is single out in some of the sector where India is having its exports to the US. But whether you are taking apparel, whether you are taking footwear, whether you are taking electronic manufacturing, in all these segments, we are not threatening the US manufacturing. US may be attracting investment in automobile sector, they may be looking into the investment in semiconductor, they may be looking into the investment in EVs. In all these segments, probably our exports is not coming at the cost of the US manufacturing. So from that perspective, I personally feel that though there may be threat of tariff, but there may not be an actual imposition of tariff on the product on which India has interest in the US market.
Loss is India's gain. We call it China plus one strategy. If India loses because of tariff, who will gain?
No, in fact, I don't think that India this time will lose it. Last time, after the tariff war, much of the gain has gone to Vietnam. Today's situation in Vietnam is a little different. Vietnam is having labor problem. The unemployment rate in Vietnam has come down to less than 2%. So probably Vietnam is not having that capacity to now fill the gap which maybe there because of the increasing tariff on China. And this is an opportunity for India. I'm pretty sure that this time probably we are better equipped to seize the opportunity. We have created capacities in various sectors. We have now better manufacturing coming from the Indian plants also. And we are all set to get whatever little market is now vacated by China. We did an analysis at our own and we have observed that because of the tariff war and increasing tariff on China, we can get an additional export of around $25 billion over and above the incremental exports, which happens where we are clocking around 5 to 10% growth in our export to the US.
Which are the categories where India is benefiting because of cost arbitrage? Which are the categories where India currently has an advantage in terms of specialization?
In fact, if you are looking into the sunrise sectors of exports, electronics, electrical equipment, pharmaceuticals, chemicals, auto components are the sector where we can get a lot because of the additional duty imposed on China. If I'm looking into the traditional sector, apparel and textile, footwear, toys and games, furniture and home furnishing are the segment where we are all set to gain major market in the US at the cost of China.
I come to two sectors which are very sensitive. One is textiles, where we know that excepting home textiles, we've been struggling in areas of fabric, in areas of garment. If a tariff comes now, do you think it will just make it slightly more difficult?
No, if the tariff comes exclusively on India, then definitely what you are saying is true. But I'm not expecting any specific tariff to come on India because in my view, Mr. Trump will actually impose the tariff only on the segment where he wants to protect or propel manufacturing. These are not the segment where US want that in the apparel sector, they want investment and then they want to build the capacity. So here, the tariff will be used only for the negotiation purpose.
Give for US to not impose tariffs. What do you think we will also give? I mean, there would be some retaliation, there would be some debate, there would be some deliberation, there would be some negotiation, and there has to be give and take both.
No, absolutely. If the US imposes the tariff, if the past is any indication, the same government first negotiated with the US. When the negotiation failed, we went for the retaliatory tariff, and over a period of time, a compromise was reached where US has removed additional tariff on steel and aluminum, and we reciprocated by removing the retaliatory tariff. So all these options are open.
Net, you think one should not be worried about tariff and tariff war impacting India?
No, I am pretty sure that even if the tariffs are applied, India will be gaining in the process because our strategic relationship with the US is there. We are not competing with the US where our export is threat to the US manufacturing. So First of all, I'm not expecting actual imposition of tariff on India, and if actual imposition of tariff is there, probably the government will negotiate and government will have the option of retaliatory tariff, because we have seen that happen in the past also.
I appreciate your time. Thank you for joining us. Let's take a break. You're watching Deep Dive with me, Nikunj Dalmia. When we come back, we'll stay with our big story. We are looking at all the nuances, left, right, and center, in terms of what and how your portfolio could get impacted if there is a trade war. What essentially, in terms of a time frame, we should expect, and what about the Prime Minister's agenda in terms of how the sequence of meetings in his 2-day bilateral visit is likely to move. More on that when we come back.